Hello, welcome to my channel. In this video, I'm going to be going through how I'm going to be documenting my observations from my ICT study from the 2024 mentorship. So there is actually so many PD arrays, so many different things that we have to observe in the market. So this is how I'm going to be journaling from now on. So I actually found this only about last week from another YouTuber, and this is he had like a breakdown from each level, so each PD array, so PD array liquidity, new week opening gaps, first presented gaps, opening range gaps, order blocks, wicks, fair value gaps, breakaway gaps, inverse fair value gaps. So I've noted all of these down, and then I have trading observations. So this is like a full trade review journal. This is price action, so if I notice some interesting characteristics in price action, I'll write it in this journal. And then drills. So when learning new PD arrays in ICT's video in October, he mentioned that if you do drills every day, no matter, so for example, let's say you want to train on fair value gaps, you enter on every fair value gap and you mark the nearest liquidity. So this is where I'll be doing that. I also have one on macros, which I recently started. Basically, I want to document my sessions and the macros that run in those sessions. So I trade Asia session, London session, and New York PM session. So I'm going to be documenting all those. Then I have the market conditions. So this is going to be how the market behaved over the full day. So I'll just give you an example. On the 26th, so I have the Asian session, London session, New York AM, and New York PM. This one takes a lot of work, so I do need a way to kind of make it more efficient on how I'm still documenting the condition of the session, and then also being able to journal it, because all of this takes a lot of time. So I do need to kind of keep up to date with all of it, and if you're keeping up to date with all of this, then when are you actually trading, which is the most important part. But I think this will definitely give me a good way to mark and continue like documenting all of my observations. Originally I had a daily journal, as you can see, so I started in like August when his first video, and then I was just documenting like how the day went or something. But if I do this, I can't exactly refer back to it. So if I saw something like this green box here is a new first presentation fair value gap from the PM session, but I have no way to refer back to it because it's just in a journal. So now I will have to start putting all of my observations into here. So I can give you an example of how each page looks. So if I go into Wick, this is still a work in progress, but Wick review 1. So my main tags that I want to see in a Wick is how far price trades into it and the time frame the Wick is on. Maybe I'll look for more properties, but at the moment these are the two things I have. So if I go here, you can see this was an hourly wick that formed on maybe 21st or 2nd, but price has only traded into once. And then I write down exactly what I observed. So this was an hourly wick, one price touch, near it, again near it, took out all this. So this wick took out all of this liquidity, traded it into a gap, close to a gap. So that's something I can note. I marked out the levels, the quadrants, and then you can see that price only traded up to the 0 to 0.25 quadrant level, and that's how I have this depth. And that is the one I'm marking up. So this one marked up that. This is the 1 minute. And then I just write down interesting characteristics I see. So price trades into the high of the wick. Price swept previous low at 2:38 p.m. So you see one touch, but then it swept the low again, and then higher highs keep getting broken in a very algorithmic way. What I mean by that is when it's trading up, it's just going back and forth, up and down, back and forth, up and then down, and then back and forth, up and down. This is mainly to probably take out this after it's touched a higher time frame reference point, which was the 1 hour wick. I think these are kind of the things that I want to document in order to build my model. So at the moment, I still don't have a proper model yet. This is another wick, but you can see this one traded much differently. So we actually closed. So we actually closed within the wick on the 1 hour. Like we closed down, you can see this line here. So once we traded up, we traded 1, 2, 3, 4, and then we moved away. So this is another example of a different type of wick. But the entire time, the price level did stay in the upper quadrant. So every time price trades to this higher time frame wick, there is the opportunity to open a long, and it strongly rejects from this area. This could possibly be a entry point for me if I'm using wicks. And then the entire generation, price did not break the constant encroachment. So let's say I'm looking from a higher time frame perspective, I expect the constant encroachment level not to be broken from the 1 minute if I'm looking at a 1 hour wick on its first touch. So yeah, I think this is going to be very useful. And then I have opening range gaps, new day opening gaps. So there's another one I'm documenting. So London session, this is the session. I have, sorry, not the session. This is the name of the book. And then I have the size of the new day opening gap, the age, the depth. So I recently added this, that's why only these three have it. And then you have the macro. So what macro did the new day opening gap touch or go through? And then what time did it move away from? Macro time, it moved away from the new day opening gap. The news, number of gap touches, and then the time spent. So I do definitely want to use new day opening gaps in my model. I think what ICT says is they are basically almost a magnet for price to trade to. They are very heavily relied on for the algorithm. And I do notice that as every time I document, I just keep seeing price refer back to this and then trade away from here. But yeah, this day was NFP day, non-farm payroll. So this is why the trades were pretty poor, as in price action just went through all the PD arrays. And then another thing I'm documenting, so this is my trade journal, and this is all the trades that I have. So let's see, I have, this was from, so this one has the most tags because these are my trades, and I do want to have a consistent record of all the things I'm using that I think are important. So this one used, so I start off with a PD array entry. So this is the entry I used for entering price. This the date of the trade, the day, the delivered off means if I go to the 1 minute. So originally price, there was a BISI on the left, which I might have marked here. Yep. So you can see price delivered off, which means there was a BISI here, and then it touched this BISI before moving away to the opposite side. So that's what delivered off means. And then higher time frame bias. So I didn't have a bias for the higher time frame or the session. Higher time frame PD array rejection. So let's say on the higher time frame you have levels. So the higher time frame I use is mainly the 15 minute or the 5 minute, and then I can see that there is a gap here. if it rejects from here, if it rejects from this area between this high and this low, do you see how there's a gap here between the candlesticks? I would say that would be fair value gap, and I would put that as my PD array rejection. And then this is the time. This trade, it rejected off the new day opening gap. I also consider that a higher time frame PD array because that's just kind of the array I'm using. And then liquidity sweep, so let's say the price swept a liquidity zone before it created this trade. Then I'll note it here. I have all these levels. And then target, so I have a few targets. So one of my target will be relatively equal highs, which you can see in this trade here. So relatively equal highs are basically when a candle makes 1, 2, 3. So at least 2 different periods in time where it traded to the same level. And this is basically a magnet for price to drive through. A lot of people use this as a target for trading. Retail would probably state that this is support because every time a candle touches a specific level, they think it's getting stronger, but in fact, you're just building more stop losses here for price to run straight through it. And then I also mark down my macro time. So macro time is what period in time. So a macro runs every 1 hour between the time of the 0.50 to the 10. So 50 past and then 10 past. So between those periods of time. And those are the times when price will run to either an inefficiency or liquidity. And you have to watch out because if you enter a trade and there is liquidity above where you could have a stop loss, between this time price could become very volatile and just run your liquidity or wherever your stops are. So that's why I keep these, and I want to see if my targets are being hit within this period or is it being hit after. That's why I got 2. So the trade went through this 2 different levels of time. And then news, I like to keep track of news. I got NFP here, which means non-farm payroll week. So this trade was done in the week, but then it was also done in the day. So this was an Asia session of NFP day, but NFP usually happens in New York, so New York time. But it's still the same day. And then status, were you right or wrong? How many targets were hit? And then the time it took to hit all those targets. As you can see, this trade really just ran like we came down into the new day opening gap where I would expect a rejection. But because it was NFP, it did run through back up again. And then when I saw this gap here be filled, I knew that this was a good entry because price had already run all of this liquidity here and here into a gap where the body actually closed exactly in the gap. And then we ran back down. This, I didn't want to see it get that low, but it did, and it formed an IFVG here, and that was my entry, IFVG, where a price goes down and then back up. And then you have a gap on the sell side and the buy side, and then it basically becomes a efficiently delivered price. And then slowly chops around, goes up. Sorry, not chops around, but slowly goes back and forth for time until the algorithm starts at 9:50, and I think it ran straight to the partial. And then we traded back from 9 p.m. I did notice that at the beginning of the 9 p.m. session, at 9 p.m. or at the start of every hour, till 10 minutes after the hour, sometimes the price macro changes direction. So from 8:50 to 9 it ran up, hit the liquidity, and then from 9 to 9:10 it came down to hit target and inefficiency, which I need to kind of document a bit more. And then we went up and down, and then this could have been another entry to target these highs and the initial buy side. So that was a really good trade. That's how I'm marking up my trades. And then, so market conditions. So this is the conditions of a market. So I would say every session, so a day is broken down into 4 sessions. You got the Asia session, London session, New York AM session, New York PM session. And I want to document each session in order to understand how the daily range is made. So a daily range is basically your candlestick. And then let's say like your candlestick is formed with a downwick and an upwick. So I want to understand, if we go down, do we trade back up in London or Asia or New York AM or New York PM? So kind of documenting that at the moment. And the stuff I've written, the tags I've got is news. Basically what news is occurring. Red means high impact, yellow means medium impact for the session. Condition, retracement, so I have consolidating, expansion, retracement. So that means, is the market consolidating at that period in that session? Is it expanding or is it retracing? Day of week, and then a quick description on what happened, and then what liquidity was swept. So as you can see, I've marked down a lot of liquidity, and in this, New York AM basically took out New York New Day open, Asia session open, and Sellside data lows. So a lot of liquidity in this one. And that is how I'm doing market conditions. Daily profile still a work in progress. So this is how I want to mark the overall day. So you got your daily candlestick, and then you got your daily candlestick here. Then you got how each session is formed. So you got New York New Day goes up, London session consolidates, New York AM session drops. So that basically is how an entire candlestick forms, and the more we document it, the more we will learn how to expect what will happen in each session, because each session has its own bias. So yep, got all of that. And yeah, that is at the moment how I'm documenting my current observations. If I do add more things, I'll update you in another video, and I will try fill in as much as I can in this next week. But every time I document, I'll write everything I've done and what I learned from it. I think this is a really great way, and if you want me to share my Notion document with you, maybe you could send me a comment or message me, and I'll put my socials in the link below, and I can share this with you. And I also have a lot of notes here for the 2024 mentorship. So these, I definitely would recommend watching all of these lectures before you kind of just read the notes, because these are what I've written, but they will definitely help if you write your own notes. I can go through all of the notes and how I'm taking those as well, but at the moment this was just a video on how I'm doing observations. And yep, thank you for watching my video. Subscribe to my channel if you want to continue watching my journey on how I'll become a profitable funded ICT trader. Talk soon.